real estate crowdfunding allows you to pool your money with others to purchase real estate. The idea is that many people are willing to invest a small amount, adding up to a large sum of money. As such, crowdfunding allows investors to become shareholders in real estate property. So if you want to learn how to grow or build your business with real estate crowdfunding, stick around until the end. Hey everyone, it's Alyssa here from Bay Property Management Group. Before we get started, be sure to subscribe and hit that notification bell so you never miss out on our exclusive content. With that said, let's jump into today's video. What is real estate crowdfunding? Real estate crowdfunding works as many other crowdfunding ventures do. Generally, investors ask others to contribute money via online fundraising to help fund a property. Typically, investing in real estate requires a large down payment, but modern real estate crowdfunding platforms are working to lower the financial barrier, so you can invest with smaller amounts of capital. Individuals that contribute capital can provide a means of financial backing for current or prospective real estate investments. Opportunities may include residential or commercial buildings, new housing developments, retail or office space, and more. Reasons to explore real estate crowdfunding. Investors may be interested in exploring real estate crowdfunding for several reasons, which may include low startup capital compared to traditional real estate investments, access to new or exclusive properties. More significant amounts of capital can allow individuals to invest in larger property holdings than usual. It gives investors a chance to diversify assets and portfolios. Many shareholders split the risk instead of one investor. Offers exposure to the real estate market without personal ties. No need to qualify, obtain, and pay off a traditional mortgage. And it doesn't require owners to guarantee loans with personal assets. Now that we've gone over some of the reasons people use real estate crowdfunding, let's discuss how it works. In the past, crowdfunding was commonly associated with equity transactions, where companies would use the process to raise money. However, real estate crowdfunding is similar to private real estate funding. In addition, several investors carry the risk compared to the typical situation of one person loaning 100% of the investment amount. Typically, in a crowdfunding transaction, there'll be 10 to 20 people investing between 5 and 10% of the investment. Modern online financial technology or crowdfunding sites allow investors to pool their money to fund real estate investments to eventually earn a profit. That said, a few $100s can be enough to get started with this investment solution. Generally, crowdfunded investments are paid to real estate investment trusts or similar financial means. These structures serve as a holding company that own and operate diverse real estate investments. Different investments may include houses, apartments, condos, retail or office space, hotels, malls, and more. That said, some real estate crowdfunding platforms allow access to private market real estate investments that may offer higher returns than publicly traded REITs. For instance, a public market investment with a daily liquidity has an average of a 20-year annual return of 8.2%. On the other hand, a private market investment may offer 20-year trailing returns of 12.3 or more percent. While it may seem like an exciting opportunity, you probably don't want to dedicate too much of your portfolio to crowdfunding services. After all, it's best to have a balanced portfolio. But if you're looking to diversify and potentially earn favorable returns, allocating some funds to a crowdfunding platform can be beneficial. Next, let's discuss how to get started in real estate crowdfunding. Finding an online real estate crowdfunding platform isn't hard. They're generally ready and willing to accept your contributions. However, it's crucial to do your research on real estate crowdfunding and different platforms before making any investments. Here are some points to consider if you're looking to start crowdfunding. Research pros and cons of each online crowdfunding platform. Consider how much you're able to comfortably invest. Think about how long your money will be tied up and determine how long you can go without access to funds. Determine and review the type of property holding you'd like to invest in. Calculate what kind of return you're looking for per your investment. Compare online sites, services, terms, and investment opportunities. Prepare necessary documentation or tax forms to prove your investor status. And meet with your accountant to determine any potential tax impacts of real estate crowdfunding. Once you've covered all the bases, it's time to find a platform that will adhere to your investment goals. Here are the top crowdfunding platforms for investors. CrowdStreet. One of the more popular real estate crowdfunding sites is CrowdStreet. Its innovative approach allows accredited investors direct access to a large range of quality real estate opportunities. Typically, these projects look to deliver high returns for investors. Additionally, CrowdStreet provides some due diligence for investors by conducting background and reference checks on developers who want to contribute financially. However, it's important to note that many offerings require a minimum investment of $25,000, which is quite a lot compared to other platforms. Fundrise. Fundrise allows any investor to get started with real estate crowdfunding, whether they're accredited or not. With Fundrise, you can team up with other investors and buy residential or commercial properties quickly. This platform is best for beginners since it's easy to use and highly innovative, making the process a lot less daunting. However, it's important to note that most privately held investments don't provide much liquidity, so they're geared towards more long-term investors. Equity Multiple. This platform focuses mainly on privately managed commercial assets. For instance, some investment opportunities may include office spaces, hotels, data centers, and more. That said, minimum investments through Equity Multiple may range from $10,000 to $40,000, which appeals to more wealthy accredited investors. Realty Mogul. Both non-accredited and accredited investors can access commercial real estate investments or individual properties with Realty Mogul. Additionally, it includes a variety of REITs, allowing financiers to spend their dollars across several real estate holdings. However, investment minimums are relatively high, typically around the $5,000 mark, where fees can vary depending on your individual investment choices. And finally, YieldStreet. YieldStreet is excellent for those who want to invest in a variety of privately structured opportunities. Luckily, these deals are backed by assets to help protect your principal, leaving you with less to worry about. Additionally, if you're just looking to get started in real estate crowdfunding, YieldStreet offers opportunities ranging from as little as 6 months to 5 years. Although the platform is mostly for accredited investors, even non-accredited investors that want to earn passive income can do so by investing as little as $1,000. Like any investment strategy, real estate crowdfunding has some pros and cons. So before you commit to a real estate project, you must review the advantages and disadvantages to make an educated decision. Here's what to consider. The pros of real estate crowdfunding. Access to unique real estate opportunities and projects. Allows property owners to expand and diversify their portfolios. Often pays higher dividends than traditional investments. Eliminates some common concerns that owners may encounter. And requires minimal upfront and ongoing payments compared to traditional real estate investments. Cons of real estate crowdfunding. Depending on the platform, you could have annual fees of 1% to 2.5% of your assets. Assets are illiquid, so you can't sell them quickly or easily. Some platforms allow only accredited investors. Many newer platforms may not have a lengthy track record of success, and investors have to pay taxes on their income they receive. No matter how you want to invest, keeping your personal assets managed properly is crucial. Whether you own rental properties or contribute to crowdfunding platforms, it's best to have a trusted property management team by your side. For more advice on a variety of other issues important to the rental industry, subscribe to the Bay Property Management Group channel, and don't forget to hit the notification bell so you never miss out on exclusive content. Also, be sure to check out our blog via the link in the description below for tips on investing in real estate. If you liked this video, please give it a thumbs up or leave a comment down below. Thanks for watching, and we will see you in the next video.